Well, hello there. I'm going to go ahead and help you with building a Roth IRA retirement account using an AI robotic trading software. So all you got to do is watch us make money for the next 90 days. Make up your mind whether or not you want to buy into the bot. The bot, they're for sale for various numbers of prices. I found one bot that I actually like, and it was set up. They're not greedy, so they're selling it for $10,700. They're not greedy because the other bot I found that was pretty good may not be doing as good, but you can make adjustments to that one. And if you know what you're doing, you might be able to raise it above 20%. Might even get as high as 40%. But let's talk in reality here. And let's stick with our guns. And a good $20,000 might make you 10%, 11%, 12%. But this bot at $10,700, starting with a $10,000 account, so you would have had to have put exactly $20,000 into the program, 10,000 in your account and 10,700 into the company's account, so that you're buying their robot to use it. Lifetime license. Okay, so what I want you to understand is this is just a template. It's a Excel spreadsheet, and I've manipulated the cells. I put in 16% ROI right here. Interim interest percent is 16%. The terms we're really looking at is 36 months. And I originally made this template to buy a $5 million house and pay out the owner $10 million from the investment. The investment was to put an LLC together and give 100% ownership actually 98% ownership to the seller of the house, and leave the managing member a 2% in there as a C corporation. So then this partnership agreement would be paying the gentleman $10 million for his house, where he was only asking $5 million. So he should be pretty excited about that, especially in a market where the houses have fallen down and where the house is isolated from the rest of the real estate market, and it's the only house on the coast being sold for $10 million. So anyway, the gentleman is asking $10 million for this house, so I'm going to change that number to $10 million. This is just for an example here, just to show you how I built the program. All right, and this number, actual sale price, will end up being $20 million. All right, so let's get that in there. There you go. So, okay, so 10 million goes to 20 million. All right. So then this was made for a 20% of $10 million, which would be $2 million. So there we go. And on the 37th month over here, the LLC would have in its account about $459 million. All right, so this is all in a brokerage account trading Forex, which over $6 trillion is traded on a daily basis. This is the same type of account. George Soros made $1 billion for him and his investors in one day. Now, how do you make $1 billion in one day? All right, so anyway, if this were managed correctly, don't know what the maximum number would be before the brokers shut you off because you were making or drawing too much money from there. Theoretically, if you use an A broker, you shouldn't have any problem. You should be able to trade a $5 million account every day. So if you look for $5 million in here, here we are on the 7th month. I'm just checking a few things out here and seeing how it all looks. Okay, so $5 million, you're going to spill out 904,000 into a basin. Your first basin would be basin number 1. Now, basin number 1 could be any kind of an investment, but we'll go ahead and spill it over into another Forex account. Now, if you understand what's going on, we just deposited $904,000 into another Forex account. Now we're going to manage the $5 million every month, and it's going to do this deposit every month. So in about 5 months, we're going to have another $5 million. So 5 months on top of number 8 here, we'll go 1, 2, 3, 4, 5. So on the 13th month, we're going to have another basin, number 2. All right, so basin number 2 is going to start spilling out another 900 whatever, but it's really well, anyway, I won't. It'll be another 904,000 for that count again, because we go back up here and figure it from here to here. All right, so if I was to walk in and offer somebody asking $10 million, and I offered him in contract $20 million for his house, you think he would take it, especially if he couldn't sell it in the market? Well, by the time we make 20 million, we're into the 16th month. All right, so here we are, 20 million in the 16th month. Everything after that is our money. 20 million goes to the seller, but we don't take the money out right away. Now, the only thing is there might be a tax payment at the end of 12 months, which is right here. Well, that's really nice. There we go. So that tax payment is right there on the 12th month. Normally, when you file a limited liability company, you do a tax election for whatever you're doing, and maybe it's a partnership or however it can be figured out. and you file your taxes to be done on the 12th month. So the timing gives you a little extra time. Instead of filing on March 15th or April 15th, it'll be based on when you started the LLC. All right, so all those kind of rules apply according to how you make all of your elections. All right, so now, okay, so then notice that in the end of the day, on the 36th month, we're over here with about 418 million minus your tax payments. All right, because we're on our third tax payment now. So government usually wants 38%. California usually wants 14%, so that's 52% taxation. So we're going to use a tax attorney back in Philadelphia to help us minimize our taxes and what we're doing. And so we'll do everything successfully. We might be in a position where this number isn't as high. But originally, when I built this, I built it for a Roth IRA. And if you go in and you put in, let's say, $6,500, and you maxed out your Roth IRA at 64 years old, this is what you would see. You would see $1,040 profit. $1,040 profit. There we go. So you'd see $1,040 profit the first month. And on the 12th month, you'd be on that month $5,321. So I think you're starting to see, hopefully, how much money there would be no tax payment for a Roth IRA. So that's all profit. And then if you just kept compounding it, turning up the lot sizes, and you kept moving it aggressively, by the second year, your little $6,500 investment would be worth about $229,000 in 2 years. That's with that 16% ROI. Now let's take a look down here. Let's pretend you didn't spend any of the money and it was still growing, and you got an average of 16 plus percent. You're going to have at least $64 million in your Roth. Now, you'll probably have to figure out, or we'll help you figure out, what the tax accountants have to say about, how much money can you actually have in your Roth. Well, we all remember in the election a few years ago when the guy from Utah, I remember his name, Mitt Romney, had a Roth, and he had over $2 million in it. So I remember, right? Don't quote me, but check it out for yourself. Do a little research. A little R&D. Okay, so, all right. So let me go back to this simple thing here of, the next year, the second year, you could put another 6,500 in, and you would have been up to a lot more than 10,000. So you'd be escalating because you'd have 5,000 plus whatever's here on 24. 5,000 plus, so you'd be at 36,000 on the second year, or actually 37,000, almost 38,000. All right, so I think you can see how this works. Hopefully, if you have any questions, just call me. I'd like to run you through and make it easy for you. I'm going to set this Excel spreadsheet up so you can punch in all your own numbers for your own benefit. Change these numbers down if you want for, say, right now, let's just put it in here. So if we were to stay even with inflation at 6.53%, 6.53%, so that would be, let's see, as 0.0653. There you go. All right, so that number, you would be making about $424 per month in the beginning on your Roth. And at the end of the day, on your 36th month, you'd be making about $3,800 a month. Your Roth would be at the size of about $63,000, and that's the end of 3 years. And let's look up here. Looks like you'd have about, what does that say? $328,000 at the end of 62 months. And that's without making any more deposits other than the very first one. But let's just say we did 2 of them in 1 year. And we did 6,300 or 6,500. I'm sorry, 6,500 in on April 14th, the day before tax day, and then the day after tax day, April 16th, and it equaled $13,000. So this is the maximum you could make without making any other deposits by just doing this a one-time deal. You'd be at $656,000 in your Roth on the 62nd month. Now, pay attention now. I'm going to show you how to build this into an equity bank. An equity bank is simply an LLC that your elite trust owns. It owns 100% of the shares of your elite bank. All right? You are in control of it. But everybody knows they can't touch your elite trust and they can't touch your equity bank because your equity bank is owned by your elite trust. So anyway, so now you understand the importance of having the right type of trust and the right type of an equity ownership of your real estate. Now, rule number 1 is really simple. All right, rule number 1 is each property is owned or registered in its own LLC, limited liability company. All right. All right. So, just that. Enlighten me. Each property is owned or registered in its own LLC. Rule number 1. Rule number 2 is your equity bank is 100% owned by your elite trust. Now, all this information is handled through my company in Las Vegas, Nevada, and you can always go to a workshop and we can help you formulate everything that you need. We buy the information. All the information is assembled for you and given to you directly. We charge you $2,500, and it's well worth it. And you learn how to build your own elite trust, and you can use an attorney. And hopefully, within a few years, we'll have an attorney in house to help you formulate all of the things that you need to do. So basically, you've got a equity bank, and when you make a payment on your house, your apartment building, your whatever is owned by your LLC, you're making a payment to the equity bank, just like you're making a payment to the mortgage broker or the local bank that you borrowed from to buy your house. So all you have to do is figure out how to use your simple little system to build your own equity bank and borrow money from your own bank to do whatever it is that you want to do. Say you wanted to buy a car and the car was 26,000 and it was a Range Rover diesel and it got 28 miles a gallon. So you just wanted it. So you bought it and it cost you, say, $23,000. No, say 2016, 2017. And so you just went to your equity bank and you filled out a piece of paper, you recorded it, and then you drew against it the money from your equity bank. Your equity bank bought the car for you. Now all you got to do is pay your equity bank back at whatever interest rate you want to charge yourself. Remember, all that money goes into your equity bank and is owned by your elite trust. Now, for taxation reasons and everything, you can talk to your attorney and you can find that from your tax accountant and your tax attorney, all the benefits of that little teeny tiny system that I just explained to you. So do the same thing in this type of account where we're buying the house for $10 million, but we're paying the owner $20 million. And we're going to take the program. Want to look 1 second here on 36 months. 36 months made us $126,000 on our Roth. All right, so you're going to put a Roth together no matter what, because you want to make money and you want to have extra money, and that's all tax-free when you're 59 and a half and over. So you can always dedicate another 6,500 when you're 60, 61, 62, 63, all depending on what the maximums are, if there are any, that they allow you to do. So, okay, so let's go back here. Now I'm just going to give one more definition of this house that the gentleman wants to sell for $10 million. Now imagine if we put an LLC together and we had the gentleman put the asset in the LLC, and then we were able to get $2 million loan against it. All right. So instantly we're making 130,000. Notice over here, we are paying $20 million for this house. Contracted sale was $10 million. All right, $10 million was the contracted sale, but we're actually paying them $20 million for the house. All right, so the loan is $2 million. All right. The interest expense is $1 million. I'm just almost $2 million. Not sure how I calculated that out, but that number would change depending on the interest rate that the bank was charging to borrow the money on, or whoever, or the equity bank. This could come from your own money. Once you start doing this, you start seeing how the rich and famous actually pull money out of their own equity bank to fund a project. Now, if you were always able to put one of these investments together to underwrite the project, notice that the project is making money and it only took 10 months to double. 10 months to double, and you're making $245,000 a month. And on the 24th month, your account is now worth about $9 million. So let's go all the way down to 36 months. Notice we're getting really close to $20 million. On the 36 months, we're just a little bit less than the 26. Let's go up here and make sure we have our numbers right. Okay, so that was 7%. So if we're going to get exactly 0.16, which is the interest rate, 16, notice this changed to 16 there. The seller freezes 1 million, but he actually freezes 2 million on this deal. So let's go here. All right, so let's go down here and see where his 20 million becomes 20 million. So on the 16th month. On the 16th month, 20 million at the 16th month. See? All right, so there we go. So our calculations remain accurate. Up here on the equity bank, we have $458 million. Now, I was talking to my banker the other day, and he was willing to put 20% ROI per month. I put $2 million in. So I think that was, what would that be? Let's see, let's just go back here real quick and calculate that out. So you can see the numbers. I don't want to just say them. On $2 million, 20% is $400,000 per month. And if there was 42 months, if there were 42 months, then how much money would that be? They found a typo in my formula. No. Oh man, here we go. Had a typo. I got to look a little bit closer. Getting blind in my old age. All right, so there's F11. It's really F10 is what we want. F10 times 42 months. There we go, and hit enter. I don't know how that went goofy. Okay, so F10, where's F10? Oh, F10's over there, no wonder. So let's go back and change that to C10. Formula is C10, not F10. There we go. There we go. So 42 months, that calculation is about $16 million, almost the 20 million that we needed. So I could I could put the 2 million in to the other gentleman's bank at the end of 1 year. I would have the 20 million over here. So it all depends on what you can do with your money and how you want to work it. All right. So let's go back to 2 million and 16%. What we know. All right. That changed this to 16% because it's still cell 3, C3. Let's forget this number. All right. And we're going to pay the guy $20 million. We we contracted to sell for 10 million. That's what he was originally asking. We borrowed 2 million against the property, and we had a $4 million accumulated interest expense, which we'll probably have to pay down here somewhere around the 36th month. And guess what? We have $418 million in there. So we did pretty good with the investment. There was a tax payment due right then, and there was a tax payment due right here, and there was a tax payment due right here. So let's just give a quick calculation of what that tax payment would be. Let's say it was, I don't know, tax payment. So here we go, equals, and we made some money. Minus the, what is it, 10 million? No, it's 2 million. Put 2 million in there, so we got about 9.8 million. So we've got to have a formula here. All right, we want to get in here and go boom. So let's just do that. All right, now we're getting messed up here. All right, so there you go. All right, so equal sign I-25. That's not right. We want D12. Or let's just go ahead and put the number in there. All right, so we'll go equal sign, and it'll be 11. So we're thinking somewhere around $9 million. All right, and we're going to multiply that by the crazy 38% tax rate. 38% tax rate means 38%. So that'd be 0.38. And that would be approximately $342,000. So notice that doesn't bite us very bad. So we would subtract this number by 342 because that's where we would take it out of. And so the next number down here would be a little bit less. So same thing would be down here probably. Tax payment. We're making more money again. So we'll say equal sign. And 68 million. And minus 9. So 59 million. So 59 million times 0.38. Now, if you live in California, you're going to have to also pay 14% for the state. Don't you just love being a football player in Nevada? So you're going to owe. Is that right? Doesn't seem right. Yeah. So I guess you're going to owe 22,420,000. So this number is going to drop down to about 70, 22, $48 million. So this number is going to be a little bit less. So let's go back to $48 million. So you're going to make about 6 or 7 million in the next month. So there you go. It takes 3 months to catch up with your tax money. So that kind of gives you an idea, what you can do with your money. Now, let's go play the game of being wealthy, but let's not take it to such a limit where we forget where we came from. I mean, look at everything going on. Like right now, you got Donald Trump over here. He just got shot in the ear or whatever, right ear. And you got Biden. He's over there going nuts because he's got COVID. Isn't that strange? He's got COVID. Trump got shot in the ear. All these crazy, terrible things going on, all because it's an election. So you would think that if they would just tax us a flat 8% or 6% or 7, probably 7, 6.5, 7%, that they would be able to actually raise all the money that we need to spend as a government. Would we be able to pay all of our expenses to supply our Navy, our Army, our Air Force? Um, what is the break-even analysis of all that? And why wouldn't you keep a surplus in there? And then it's like Trump was saying, I'm just speaking because I can, and it's obvious that if you pay somebody something, they're going to do whatever they want to do. But if you don't pay them, then they want to know why you're not paying them, and they want you to pay them. They want the money. Heck, they're a Brazilian or Venezuelan government, and they want to spend all that money. Who knows what they do with it? They probably don't help their citizens out, but whatever. But as soon as you stop paying them, then they stop doing whatever it is that they're not supposed to do, which causes war and all sorts of damaging things. So I think God is in this, and he's paying pretty close attention to everything, every detail. He's on it. Well, anyway, I appreciate you listening to me and rambling on here with this little spreadsheet, my Excel program that tells you how to manage your Roth, your ability to buy a house when you don't have the money. You could literally do something simple like build an LLC, build another LLC inside of the LLC. So now you have two LLCs, and you can bring a third LLC in, which would be your investor. So if your investor put in $2 million, then and you gave the investor 70%, you managed the rest, the whole program for 30%. Now you're making money. So if you go down here and you look, if you were actually able to get to this 19 billion, what is 10% of 19 billion? I think it's 1.9 billion. So you're looking at 2 times 3, that's almost $6 billion that you could literally manage as a managing member of the LLC, the ultimate LLC, which is a partnership LLC. Of course, you got to be careful in this day and age because you got to make sure that your taxation elections are perfect and correct, and then make sure that everything that you put into equity into your pocket goes into your equity bank, and even your mortgages that you're paying, you should be paying your equity bank. So there you go. I probably went on a little bit too long, but that's okay. 37 minutes, and hopefully you understand what it is that I was talking about. If you don't, call me up. Let's have a conversation on the phone. Well, definitely happy to help you. I'll even put my guitar down and stop messing around waiting for a phone call. So give me a phone call. There you go. All right. Talk to you later. Bye. Okay. So I'm going to give this conclusion, to live the life that you deserve, which is, a great idea. And I put perpetual wealth partners together so that we can all come together and we can start, you know, teaching each other the simple tactics in putting your Roth IRA together, building your whatever it's called. It's called an equity bank. The equity bank, 100% owned LLC by your elite trust, and just putting all the pieces together, making everything fit nice and neat, making you like a Rockefeller where you have no assets, no wealth, but your elite trust owns all of it. In fact, you're in control of it because you're the controller. So build up your annuities, your life, what do they call those things? Life insurance policies, like the Rockefellers used to do with their children. And then you could borrow like 60% against your life insurance policies. So, maybe your life insurance policy was worth 100 million, so you could borrow 60 million. And then when you died, everything was paid off. So there you go. Anyway, that's an insurance policy. So, okay, so let's get back to the basics. The basics are we want to establish a trading account with AI robot because the AI robots do way better than you can. Like for example, I have to get up at 4 o'clock in the morning and I have to start trading, and then I have to, make sure, that I stay with it. And normally a good account usually costs you about 12 hours of your day. I didn't mean account, I meant trade. A good trade costs you about 12 hours of your day. So think about that, and then an AI bot manages your trade, starts your trade, closes your trade. It might do 3, 4, 5, 6 trades before you even wake up. So, you know, we have to just sit back and understand that as, you know, a live trader, we can't keep up with everything. But when I was first making uh, what they called prompts, these prompts would open up a trade for you and close a trade for you. And I would set it up so that if I made $10, it would close all the trades. So when I was building hedging systems, those hedging systems would have 30, 40 trades open. And I haven't even totaled my bank over here on the left and my equity, which has to be $10 more than the bank before all the trades close positively, and add the $10 to my bank. And then it does it over and over and over and over again. And so if you set up a grid trading strategy, then you can kind of figure out what you're going to do. But I love the point and figure method, and I'd be happy to teach that to anybody who's interested. But let's build these bots based on who's already built them, and they've got a 16% return on your investment. So $100,000 invested gives you 16,000 for this month, and next month, and the month after that. So if you figure out how to parlay your trades or manipulate the lot sizes and count them up, and if you had a little tiny calculator, you could probably figure out very quickly, that you have to change the lot size by zero point 0.02 every time you win a trade. And by the time you get to this next level, 10% level up, you're trading a whole lot size larger. So all you gotta do, in conclusion, is set up your bot, get it trading, take that profit, let it run away, and then hopefully you put it in your Roth, because now you can borrow against your Roth if you want to, and um, pay yourself back. So we've got a whole system, and you deserve to live the life you deserve. So enter in as a free member, and we all have lifetime memberships when you go to a workshop. And so there's no sense spending any money until you actually go to a workshop. But then those workshops will put you in the driver's seat. So anyway, if you want to do a workshop one-on-one, I'd be happy to do that with you. All right. So in conclusion, it's all up to you. You just make up your mind what you want to do, and do it in a small way. Do it in a practice account. We call that paper money, and see how it works for you. If it's not for you, there's also guarantees that you can get 100% of your money back from people selling you the bot. So the license to buy the bot is 100% guaranteed if you decide you don't want to do it. And that guarantee starts, by the way, once you start trading. Not until you start trading does it actually start. So they have all that information for you when we divulge exactly who the traders are, and we'd be more than happy to do that for you. All right? Well, you have a great day and enjoy the bots.